YouTube, what's going on? I hardly come live to my YouTube folks anymore, man. So I thought I'd give you a live version today. Still live on Facebook, got you guys covered as well. So talking about tax shelters tonight, man. Y'all know about tax shelters, right? What y'all know about tax shelters? What y'all know about using the United States tax code as a #1 wealth building tool in the entire world, y'all? That's why people come here. People come to America because they know that the United States tax code is the #1 wealth building tool in the entire world. I'll talk about that tonight, man. How many high income earners we have on the line tonight? Out in YouTube land. Do me a favor, go ahead and share the stream. Let's let Facebook build it up. Hey, Tawana. Who else did we have jump on? Kind of scared to touch my phone. I don't have the normal setup. Hey, Myra Key, what's going on? Chris Banks. Good deal. Gary, man, congratulations, brother. Man, quick story, Gary. When my firstborn was being born, man, it takes my brother-in-law to talk about me, man, because he talk about the smile that I got on my face now. It ain't even half the size of the smile I had when my first son was being born, man. And he talked about how I was skipping around the hospital, man. I don't even remember skipping, man, but chances are I was, man, because ain't nothing like it, bro. Ain't nothing like it. So congratulations again, my friend. Keep doing your thing, man. Keep building wealth so the little one is well taken care of, man. Go ahead and start setting up the trusts and the custodial accounts, all that stuff, man. Let's get it done, bro. I know you're already on top of game, man. But yeah, so we're talking about tax shelters. Good. Now that we're talking about tax shelters, I see I got my girl Yvette Best on, so she keeps me honest, guys. This is what she does. She's a master's degree in accounting, so she keeps me honest, man. But we're talking tonight about using the United States tax code as the wealth building tool it is. So who am I? I am H Cortez, also known as the financial health mentor to the Black community, where I do my best to bring practical wealth building strategies and tips to our community, man, because nobody is teaching us about how money really works. So I decided to take it upon myself when I started learning these strategies to come live to the public, man, and share them with the people. Nobody's teaching this stuff in school. Nobody's teaching our kids this stuff. So if we don't learn it and we don't pass it down from one generation to the next, we can no longer continue to blame others for our state of being, right? So I'm of the opinion that, hey, I'm just going to take what is available to me and I'm going to make the most of it. It's kind of like Alonzo Ball and the Ball family. Everybody's knocking the man for selling his $495 shoes. My man is just taking the resources that he have access to, and he's trying to maximize them to his fullest capability, his fullest potential. So, and that's what I started to do when I started learning these wealth building principles and strategies. So anybody out there, how many high income earners do we have out there who need a tax shelter? We're talking about a little known tax shelter that is perfect for high income earners, man. And all that simply means is I know for me, before I learned this information, and I got with my mentors and they started teaching me about how money really works. Whenever I heard the term tax shelter, I thought that was only for rich and famous people. I thought that was only for rich and powerful people, right? But let me tell you a secret. That's how they became rich and powerful, right? See, we thought that using tax shelters is something that only the rich and powerful use. No, they use tax shelters to become rich and powerful, and that work to get them their wealth, so they continue to use them to keep their wealth, right? Wealthy people do not pay more taxes than they absolutely have to. Point blank and period. Period. So problem is nobody teaches about taxes. Nobody teaches how the tax code works and why working class people get taxed more than investors and business owners. Nobody helps you understand that, because if you understood that at a young age, chances are you would not be an employee. Because if you understand the way the tax code is written, there's two sets of codes. There's a set of code written for those who are employees, and then there's a set of code that are written for business owners, landowners, and investors. if you knew that as an employee, so let's take back to 11th grade and high school, and you're starting to get that first job, your first burger joint job, your first paper route, or whatever it is, and somebody told you that if you work and make your money with labor, you're going to pay the most in taxes, period. Or you have another option. You can start a business and pay a little bit less in taxes, or you can start investing and get your money to work for you and pay the least amount of all, right? Which option would you have chose if you would have given that option? Chances are you would have chosen the latter too, right? Why is it set up this way? And I wouldn't be able to speak frankly without, do I have your permission to speak frankly and we still be friends when it's over? Give me a thumbs up in the chat if I can speak frankly, speak directly, and we still be friends. I don't want to lose any friends over this, right? But when you think about this, why do business owners and investors get the tax breaks, and why do laborers pay the most in taxes? Because the laborers don't bring anything to the table. Did y'all hear that? If the laborers are not bringing anything to the table, why should they get tax breaks? That's why. See, if you work a job, you're taking from the economy. You're not giving anything to the economy. So the system says, okay, if you're going to be in a position where all you do is take, then we're going to tax your butt the most. That's how it goes. So now you might be saying, okay, if a laborer or an employee doesn't bring anything to the table, that's why they don't get tax breaks. What do employers and business owners bring to the table? Why do they get tax breaks? Well, duh, they bring employees to the table. Right? As a business owner, I can go out and hire other employees, and the government says this, hey, I need $100 in tax revenue from somebody. I don't care who I get it from. I need $100 in tax revenue. And a business owner says, you need $100 in tax revenue, but you don't care who you get it from? The government said, that's right. I don't care who I get it from. As long as I get my $100, I'm good. Well, the business owner said, well, you know what I'm going to do? I'm going to expand my business, hire some employees, and I'm going to take $10 out of each one of their check. If I hire 10 of them, I'm going to take $10 out of each one of their check and give that to you, Uncle Sam, and that's cool? Uncle Sam said, yeah, that's cool. 10 times 10 is 100 all day, every day, and twice on Sundays. So if that's what you're going to do, I'm fine with it. You don't pay no taxes as a business, and I'm just going to take all the taxes from the employee. However you get me my $100 in taxes, I'm cool with however you get it. And that's how the game is played, y'all. So the employers bring employees to the table. That's why they get tax breaks. They get tax breaks because if they grow their infrastructure, they grow their business, they grow their enterprise, they hire more employees, and that's more people for the government to tax. So they continue to get tax breaks. See, nobody told you this is how the system was set up when you were in the 7th, 8th grade, 9th grade, 10th grade, getting your first job. Because I'd have started a business back then. I was in business. I would start a legitimate business back then, right? So now you're saying to yourself, okay, if the employers bring employees to the table, what do the investors bring to the table? Why do they get all the tax breaks? Why do they pay least of all? Well, the investors bring capital to the table. See, the government ain't got no money, man. So the government can't give capital to the business owners so they can expand and grow their infrastructure. Investors do. So when the investors give the infrastructure and give the capital to the business owners to grow their infrastructures, then they get to hire more employees. And the more employees they hire, the more people the government taxes. The system is set up for business owners, landowners, and investors to win. Question is, when are you going to become an investor a landowner, or a business owner, right? So what is the little known tax shelter that is perfect for high income earners? It's a home-based business. I know nobody ever taught you that a home-based business is a tax shelter. What all a tax shelter is a way for you to reduce your tax footprint, way for you to reduce your taxable income, right? I don't want you to get this confused with tax avoidance or tax evasion. That's illegal. Ask Wesley Snipes. Ask Lauryn Hill, right? I'm not talking tax evasion or tax avoidance. That's illegal. I'm talking about tax sheltering is perfectly legal, right? I got another CPA, a tax preparer, accountant on the line. So I've got Miss Yvette and I got Miss Sandra on the line. If I say anything out of line, trust me, they will chime right in and say, hold on, brother. You ain't telling them right. You ain't telling them the whole truth, right? So a tax shelter is simply a mechanism used by those who want to make sure that they don't pay more than they absolutely have to by law in taxes. So a home-based business is the perfect tax shelter. Why? Because for $35, you can start a home-based business, right? We know that real estate is a good tax shelter. Ask Donald Trump. He lost almost $1 billion in a real estate deal. That's why he hasn't paid taxes in 20-some years. Because you can carry your losses forward and levy them against future taxable income. Right? Tell me if I'm wrong, Sandra or Miss Yvette, if you guys still on the line. Mm-hmm. So a home-based business is a perfect tax shelter. Why a home-based business versus a traditional business? Because in your home, you already have certain expenses. Those expenses already exist. If I wanted to go create another business outside of my home, I create new expenses. I'll say it again. If I have to start a business outside of my home, then I'm going to create expenses. If I run the business from my home instead, I already have those expenses. And guess what that means? Some of those expenses become tax deductible, right? Okay, Sandra concurs that I'm right on, right? Does the home-based business have to be registered to the government? No, it does not. Now, if you want to legitimize your home-based business, which everyone should, I would at least recommend that you register your fictitious business name with the state. Depending on the home-based business, sometimes if you're in sales and you're buying and receiving and selling products, you might be required to have a sales license. You might be required to get a state license, a city license to do business, depending on what the industry is. But for the home-based business that I want you to join with me, it is not a requirement, at least not in the state of Missouri. If you get with me, we can talk about your individual state. I can put you in touch with somebody who's in a professional capacity who can answer that question more directly for you. But for the most part, no. For the most part, no. But ultimately, you want to grow that thing to where you create it as a separate entity. Maybe you transition it into an LLC and you do some other things, whichever structure will best fit the growth of your business, right? But when we're going back to the expenses that you already have in your home, right? You're going to pay for somewhere to live. You got a rent or you got mortgage. And you're going to pay that every month, whether you have a home-based business or not. If you have a home-based business and you set up a business space in your home, it doesn't have to be a separate closed-off room, just space, right? In my living room, I'm in my mom's house right now, but in my living room of my house is my studio. That's where I record my morning show. That's where I take care of the majority of my business, right? In my basement for my Solid Foundation Athletic Academy, I train young athletes to maximize their athletic potential, right? So because I use that space for business, a percentage of my rent and mortgage is tax deductible. See, that's an existing expense that you currently have. Whether you got a business or not, you got to pay for somewhere to live. At a home-based business, now I'm writing off about $2,400 to $3,600 per year of my mortgage expense. You guys get where I'm going? I have a cell phone. You guys are on Facebook Live. I'm using my cell phone to stream to Facebook Live. I would have a cell phone whether I had a home-based business or not. Give me a thumbs up if you got a cell phone right now and you don't have a business. Right now, which means you pay a bill every month and you don't have a business. Come on, y'all got to talk to me. See, on YouTube, I can't see your chats. So I can't really interact with you the same way I can with Facebook. But Facebook, you got a bill that you're paying every month called a cell phone bill, even if you don't have a business. Is that correct? Talk to me, y'all. That is correct. So why don't you have a business and make that bill tax deductible? Make that bill a write-off, right? I'm at my mom's house right now. She has an internet connection. At my house, I have an internet connection. I pay for internet at my house. Whether I had a business or not, we stream TV through a Fire Stick, so I have to have internet for that. Whether I have a business or not, I would be paying for internet service in my house. So why not have a business and make that a tax write-off? See, the home-based business allows you to take your current expenses, the ones that you have right now, and make those legal, ethical, legitimate, and moral tax write-offs. Right? Some of you guys, I don't know about all of y'all, but some of y'all are going to feed yourselves a couple times a day. And some of you are going to feed yourselves a couple times a week away from your home. Right? And since you're going to feed yourself away from your home, why not talk to the service personnel? Why not talk to the hostess who are seating you? Give them a business card. Tell them about your business. Now that business, that meal becomes a business meal and it's tax deductible. It's a tax write-off. Meals and entertainment. See, the tax code was altered in the 80s to include home-based businesses as legitimate businesses with the same access to the tax code as Google, as Microsoft, as Dell, as IBM, as whoever, whatever other business, Amazon. I get the same write-offs as a home-based business owner as all of those entities. Why don't more people have home-based businesses? Because they don't know. That's why I make this clarion call at least once a day. I'm trying to tell y'all, man, you can partner with me in my home-based business. And guess what my business is? My business is teaching these strategies to other people. So I'm going to help you learn these strategies and how to put them in place in your life. You're going to go out, you're going to teach other people, and you're going to be able to make a $35 commission every time someone says, man, that makes too much sense. Where do I sign? Don't get much more simpler than that. In addition to being able to teach other people this strategy for building wealth, we have software and tools that will put you on a killer debt elimination plan. See, you can't build wealth when you're overtaxed and drowning in debt. And most working class people are both. They're overtaxed. Because they're overtaxed, they go and borrow to pay for their lifestyle. So now they're drowning in debt. Well, we'll give you a game plan to get yourself out of debt. We also teach basic investment strategies, how investments work. $35 a month. I don't, you can't, even if this was not a business opportunity and I taught you how to minimize your taxes and I taught you how to get rid of your debt and I taught you how to invest, Who would pay $35 a month to learn that? Would you on YouTube pay $35 a month to learn that? It's less expensive than going to get a financial degree. And chances are they won't teach you half of the stuff that we're going to teach you because they can't. You know why they can't? Because they're funded by corporations. If they taught you literally how to be financially free, you wouldn't need a job. Then they would be going against the hand that feeds them. They would be biting the hand that feeds them. If they taught you this stuff, you would be if they taught this in school, you would be financially independent by the time you graduated high school. You wouldn't have to go work at a job. But remember, who funds the school systems? The corporations. The corporations, because they fund the schools, they dictate the curriculum. And the curriculum is designed to train you to be an employee and not a business owner, landowner, or investor. So you need somebody like me to teach you what the schools never will. So who's ready to learn more about what I do and consider partnering with me for $35 to start and $35 a month? If you're watching me on YouTube and this sounds good and you're saying, okay, it sounds good, but I like to get a little bit more information, I want you to text the word questions and your name. Text your name and the word questions to 314-874-6887. Text your name and the word questions to 314-874-6887. And I will get you some additional information for you to review. I don't expect you to sign on a dotted line without knowing all the details, but I'm telling you, you need some strategies in your life if you're going to build wealth, period. And we teach you those strategies, right? So we talked about you minimizing your taxes, eliminating your debt, learning how to invest. What if I throw in a do-it-yourself credit education course that will teach you how to restore your own credit, boost your FICO score, maintain a good credit score, and leverage credit to build wealth? That's just icing on the cake, right? $35 a month. And this credit education is different. I talked to a young lady today. She said, you know what? I paid somebody $100 a month to restore my credit for it. It took them about 6 months to do it. And they did it. They boosted my score. But you know what? Life happened and I stumbled and I fell and I fell on hard times and my credit score took a hit. And now guess what position she's in? She's in the position where she'd have to pay somebody to do that for her again. Why? Because they never educated her. They provided a service for her. So some people don't like our method because they have to do the heavy lifting. They have to send a letter certified to the credit bureaus to dispute things on a report. They have to do the work and they don't like that. But what if this young lady used our system to do the work? Fell on hard times, credit score dipped a little bit, finally got back on her feet, stabilized. Would it be much better for her to be able to go ahead and use what she knows because she got educated to go ahead and just start fixing her credit? Or would it be better for her to go have to pay somebody $600, $100 a month for another 6 months to do the same thing again? Yes, put the number in the post for me. It is 314-874-6887. So if you got questions and you want to partner with me, go to text the word questions and your name to 314-874-6887. Right? Is that cool? So a home-based business is a good tax shelter because what it does is it allows you to take the current expenses that you have and turn them partially. Now you can't write off everything, right? I can't write off all of my square footage in my house, right? because I don't use all of it for business all the time. I think, Sandra, correct me if I'm wrong. I think the max is 30%. 30% of your living space. That's the max I can use, is 30% of my living space for a home business tax deduction. Right? But think about it. If you pay $1,000 a month for rent or mortgage, that's $300 per month that you can levy from your rent or mortgage. $3,600 per year you can write off, plus 30% of your utilities, 30% of your lawn service, 30% of any maintenance, 30% of any repairs, 30% of anything that you spend to live in that space. Now, because your business is run from that space, is a tax write-off. I want you guys to get this, right? I'm so sick and tired of people being afraid of the IRS, and that's why they can't build wealth, because they're overtaxed. When you're overtaxed, you tend to go finance your whole lifestyle. You finance your car, you finance your house, you finance your electronics, your cell phones, you finance your furniture. Some people finance their groceries. Right? So let's see, Sandra gives me, what is the max, Sandra? What is the max I can use of my home? Is it 30%? Square footage used in business. What is the max? I think the max is 30%, if I'm not mistaken. Or percentage of rooms used, right? But you can't claim and say, "Oh, I use all my rooms for business," right? But the grand total altogether, I think, is 30%. Is the max that you can't go over 30%, right? Because that doesn't make sense, right? Because you sleep somewhere in your house, right? You got a kitchen in your house, you cook, prepare moves, and all that kind of stuff. So you can legitimately write off a portion of the expenses that you currently have right now by adding a home-based business, right? Just this is, people just don't get this, and people are afraid. I'm gonna tell you, in other communities, we know that they have stay-at-home moms all the time, and you're thinking to yourself, this joker don't make too much more money than I do. How is his wife a stay-at-home wife? How is she a stay-at-home mom? She's got a home-based business. He's writing off all the expenses that she gets to play around in her home-based business. He's leveraging that to bring down his taxable income. He's paying less in taxes. Because he's paying less in taxes, he's saving anywhere between $12,000 to $15,000 per year. Then he takes that money and he invests it. He takes that money and he builds an emergency fund. He takes that money and he pays off all of his debt. So now he making his same $60,000, $70,000. You're standing next to him making $60,000, $70,000. Your wife goes to work. His wife doesn't. You know why? Because he don't have any debt. He don't pay any tax. He's not paying the same amount of taxes. He's getting more of his income realized every pay period because he's adjusted his W-4 to reflect the fact that he has a home-based business. You, on the other hand, is allowing the IRS or your company to withhold about 33% of your income every pay period. That's the difference. So two guys can be standing side by side making the same amount of money. One guy is bringing more money home because he has adjusted his W-4 form to reflect that he has a home-based business. When you partner with us, we teach you how to do that. So instead of them taking all of his taking taxes out of his check all year long, he gets all of his money up front. Because as a business owner, the IRS says, no, you get all of your money, take care of all of your business expenses, and then we'll tax you on what's left. As an employee who brings nothing to the table, the IRS said, I don't trust you, give me mine off the top. And you make $50,000, they take 18 off the top, you net 32, and then you go finance 18 to get you back to 50. So you're overtaxed and drowning in debt at the same time. So if you understand what I'm talking about and you want a good tax shelter in your life, then text the word questions to 314-874 6887, and I will send you some additional information. We can hop on a phone call. I can answer any questions. But for $35 a month, imagine going to school to get a PhD in cash flow management for $1.17 per day. That's what $34.95 actually breaks down to over 30 days, $1.17 per day. Right? And I know people who say, man, it looks good, I just can't afford another investment. Let me tell you something about that. If you've been working for more than a year and you can't afford $34.95 per month, that, my friend, is the problem. So, real quickly, the top 5 home-based business tax deductions. Number 1, business use of your home. Write off a portion of your rent or mortgage, as well as all of the utilities, maintenance, and expenses for your home. Number 2, business use of your vehicle. Your personal vehicle. If I'm driving across town to meet somebody for business, Uncle Sam will give me 50 cents a mile for every mile I drive for business. I drive 10,000 miles, that's a $5,000 tax write-off. Number 3, meals and entertainment. You got to feed yourself, right? So today I sat down and had lunch with one of my sons. We were talking about the advancement of our business, how he's just finished up his first year in college. Now he's home. Dad, what are we going to do? All right, I got some books that I've got to get mailed out. So we're going to go print up some envelopes and get those things stuffed and get those things mailed out. He gets paid to work in my business, right? But because we had a business lunch, now that $28, $29 we spent at the restaurant today, that's a tax write-off. 50% of it, because we're within 100 miles of our home. So that's a tax write-off. Number 4, business travel. Looking at going to Minneapolis this weekend. Got some business associates up there I need to meet, take care of some business. While I'm there, I might watch my sons play a basketball game. That's not why I'm going, though. I'm going to meet with my business associates in Minnesota. Since I'm there and my sons happen to be there playing some basketball, I might just stick my head in the gym and watch them play a game or two. But the purpose of me going is to meet with my business associates in Minneapolis. Business travel, that's a tax write-off for me, right? What about number 5? Paying wages to your children, right? My children worked with me in my business. We were stuffing envelopes so we can get books mailed out to people who pre-ordered my latest book. Monetize My Life, 4 incredibly simple ways to profit from your passion with little to no startup costs. Got the books in, got to get them shipped out. They're packing envelopes. They're writing, do not bend on all the envelopes so that the mailman don't fold your book up when I send it to you, right? So they get paid for that. And the money that I pay them, instead of giving them allowance, is a tax write-off for my business. Tomorrow, we're going to talk about how to use that same principle and get Uncle Sam to help you pay for private school for your children. Some of you guys got kids in private school and you're struggling a little bit because you just want them to have a better education. I get it. Well, let Uncle Sam help you meet some of that cost so you can struggle a little bit less. We'll talk about that tomorrow. Right now, it's about children. Wages to children is $3,600, $6,300, $6,300 per year per child. It's actually $6,350 because nobody in this country pays taxes on the first $6,350 earned for tax year 2017. Right? That is what's called your standard deduction. Nobody pays taxes on that. If you made less than $6,350 this tax year and your employer didn't withhold any taxes, you wouldn't even have to file a tax return. The only reason you file a tax return is if you made that amount and your employer took taxes from you all year long. Then you would be filing to get a return back, getting the money back that they took from you because you didn't make enough money to have to pay into the system. So you be getting that money back. So I just want to bring this to your attention, guys. Again, you can partner with me. I've got some other partners on the live stream. If they shared this video and you're watching because of them, then connect with them and let them know that you want to know more about a home-based business as a tax shelter, and they can help you partner with us, man. And we can teach you all of this stuff, man. They don't give up the game, man. We finally cracked in and got our hands on the game, and now we're sharing it with everybody else. Problem is, we've been taught to fear the IRS, so a lot of people don't want to make this move. I can't help you if you don't want to make this move because you're scared of the IRS. Go look up the IRS code. Go look up the home business tax code. Do your research. Do your research, but do your thorough research, because part of the propaganda machine will have you finding stuff that will make you even more scared. But no, you got to do real research and say, what does the IRS really say about writing off my home-based business? They said, if you meet these 3 criteria, you can write off your expenses related to business. Number 1, if you are willing to work your business regularly and consistently, you can use the home business tax deductions. If you work your business in an attempt to make a profit, do you have revenue coming through your business? Right? Not profits, but revenue. You got to be attempting to make a profit. See, I had revenue come through my business all year last year, but it didn't exceed my expenses. So I had revenue come in, but I end up with losses. So I was still able to write everything off. So you got to work your business regularly and consistently. You got to work your business in an attempt to make a profit. And last but not least, you've got to keep good records. So guess what? When you partner with us, we give you record keeping software that you can access right from your smartphone. Right from your smartphone. So what if you have more than one business? You're allowed to have more than one business. There's nothing wrong with having more than one business. You can operate. I have more than one business running from my home. Financial Health Mentor is my financial education franchise. Solid Foundation Athletic Academy runs downstairs in my basement. That's a completely separate business. And what's cool about our record keeping software, it allows you to manage more than one business from your phone and keep records separately for each business. Super cool, right? But that's what we do. That's what our business program is. Same write-offs more than once? No. The same write-offs wouldn't be more than once. So I would take the percentage of my basement that I use and use that as a calculation for the Schedule C that I will file for Solid Foundation Athletic Academy, and then a percentage of my living room where I shoot my show at and do all my other work. Then that is the percentage that I write off for the other enterprise, and those two together cannot exceed more than 30%. So I might be writing off 12% of my mortgage for Financial Health Mentor, and then 18% of my mortgage for Solid Foundation Athletic Academy because it takes up more space. But those two enterprises together cannot take up more than 30% or cause me to have more than a 30% write-off for the home office deduction. Cool. Good deal. So I'm looking forward to working with you, Tawana. So whenever you're ready, let me know, and we'll get you registered and get you rocking and rolling. And here's the thing, guys, and I don't harp on this as much because I don't want, sometimes people think this is bait, but when you start a home-based business, if you're allowing your employer to withhold a lot of federal taxes from your paycheck, you can adjust your W-4 form. And I've got testimonies of a young lady. I've been saying that she got $380 per month increase on her job, that she got $380 per week, per pay period. I mean, she got paid twice a month, so every 2 weeks. Her pay increased $380 per pay period. Almost $800 a month increase when she adjusted her W-4 and allotted for the fact that she had a home-based business. How many of you guys can use? Yeah, 30% is the max. 30% is the max. Even if you have multiple enterprises, that's the max combined total. So you can't do 30% for one business and then in the same house do another 30% of your house for a separate business. No, you have to split that. So maybe you do 15% for one business, 15% in the other. Total, all you can claim is 30%. 30%. So if you have multiple businesses, then you have to split the percentage usage up between the multiple businesses. So that's how you use a tax shelter, man. I use a home-based business as a tax shelter. There's over 450 tax deductions available to home-based business owners. So you can write off just a little bit of everything, man, as long as it's used to grow, enhance your business or you, because education is important. So I buy books on finance, and those books are tax deductible. I go to seminars and courses to learn more about building wealth. That stuff is tax deductible. So there's almost no limit to what you can write off, as long as you can show and keep record that this expense was related to the enhancement of my business in some type of way. Then chances are you can write it off. So with that, I've got to actually go get my boys from basketball practice. So, you know, if you got questions, man, text your name and the word questions to 314-874-6887. And I'd be happy to get on the phone with you, answer any questions. But don't let your past preconceived notions as it relates to the IRS scare you from doing your research and understanding how to use the tax code to build wealth, because the tax code is the #1 wealth building tool in all the world. That's what kept Donald Trump a billionaire, right? That's what kept him a billionaire. If he made all of his money with labor, he'd pay hundreds of millions in taxes. But because he made his money through business and through investments, he pays around 10% versus 33, 40%. I know some billionaires talk about their taxable income. They have a bigger tax bill because they make a lot of money. But when you look at it as a percentage, the percentage of their realized income that they pay in taxes is somewhere like 6, 7%. How much of your realized income in percentages do you pay in taxes? About 35%. That's why it's hard for you to build wealth. That's why the rich gets richer, because you're carrying the tax burden. They're paying little to no taxes at all, legitimately, because they understand how to use the tax code to build wealth. So with that, you guys know where to find me if you want to get at me and learn more about what we do and how we do it. All you got to do is reach out, man. Don't be scared. Don't be scared. Y'all know I'm from St. Louis, so I can say don't be scared, and really, I don't have to be playing. That's just how we talk, right? Don't be scared. Don't be scared. So with that, I'm your main man, H Cortez, the one and only financial health mentor to the Black community. Until I talk to you guys next time, I want you to get your money up, because you absolutely can do it if you're not scared. Peace out, people.